What is going on? What is going on, everybody? Welcome on. Happy Sunday night. We are live late tonight on a Sunday, the January 29th, 2023. I got some inflation numbers pulled up. I want to pull up a couple different things, dive into the futures action, which, by the way, they are down a decent amount, nothing insane. Not surprised given how we closed the week on Friday. So we'll take a look at some of that price action. Won't go too long. We'll do a couple things and then we'll pretty much get out of here, maybe 45 minutes or so. Alrighty, so I'm looking at this first. We'll come back to this in a bit. Let's jump over to the S&P. Here's SPX, the S&P 500. Here's how we finished up last week, just ahead or just outside of our trend lines. The question, like like everyone's asking, fake out or breakout? That is our question for this week. Got a ton of catalysts setting up for this upcoming week. I got to pull up the current look at. We have a ton of earnings this week. Pull up Earnings Whisper on Twitter, get them set up, and we'll take a peek into what big earnings reports we have this week. I think we have I think when it comes down to a Thursday. Thursday should be one of the most insane days like that we are going to have that we've seen or that we'll see in terms of earnings. Now, the thing is, at the end of the day, it's kind of good almost and bad. You can look at it both ways. If all of these, earnings are terrible on Thursday or they're all positive, like that's going to move the market, right? But if it's kind of a mixed bag, it could kind of cancel each other out in a sense. So let me pull myself away for just 1 second. I'll pull this up first. Hope you guys are doing good on this fine Sunday. Future short MES. I actually had a small little short on the little bear flag set up, but I'm going to close it out soon here just because the thing with the futures obviously is that yes, you can get action and get some good action. The problem is, especially when there's no news driving the action, from what I've seen is that we tend to see, choppiness and no one really cares. You'll wake up tomorrow morning and it's easy to see a wick stop you out or a wick over this resistance or under the support to stop you out and then a bounce back. So I don't want to overstay it, welcome if you're going to be playing futures like Sunday night or even during the week on a night where there's no news or we don't have a clear direction already established and we're like moving with volume. So just be careful with that. But, the moves aren't super aggressive. So it's, it keeps it nice and calm. And generally speaking, you're not going to lose a ton of money unless you're chopping yourself up, which obviously that's the danger of over trading anyway. But so pull myself away. So here's Monday. So Monday morning SoFi, that's a decent one to watch. We got some other ones, Phillips, Canon, I don't know. None of these are going to be market moving at all. But SoFi is a stock that we've talked about in the past. It's gotten some good attention, the past couple months, ups and downs, and generally still a beaten down stock. We can pull up the chart here just to take a look at SoFi because I haven't even looked at the chart in a while. All right. She's about to cross or trying to cross that 200 period moving average right up in here. So SoFi is, trying to build up over those lows. This level is no longer valid. I guess it kind of is, but whatever. That's Monday. ExxonMobil on Tuesday, all-time highs just hit last week on ExxonMobil. So watch that. UPS, Caterpillar, GM, Pfizer, Spotify, McDonald's, some good names. And then after the close on Tuesday, AMD, Snapchat, a couple of decent sized names there. Waste Management on Thursday, nothing insane. Meta's on Wednesday. Meta's on Wednesday after the close. That'll be a fun one to watch. It's been pretty volatile the past 12 to 18 months, so we'll watch it. Thursday is the big day. Thursday, Amazon, Apple, Alphabet. So Amazon, Apple, Google, Ford, Qualcomm. Not that Ford and Qualcomm are market moving, but Amazon, Apple, Google, my goodness. Thursday. So you start backing your way into like this week and just getting a feel for what we got going on, right? You go Wednesday is the February 1st. So the first month of the year ends on Tuesday. Okay. And we're not getting too much data. Monday, not much. To be honest, Case-Shiller Home Price Index on Tuesday. These aren't like going to be market moving, data releases most likely. Chicago Business Barometer, Consumer Confidence. Like those are some decent things that we can maybe get a somewhat of a feel, but shouldn't move the markets drastically. There could be a little reaction from them for sure, but shouldn't be massively market moving. Wednesday's a big day. Wednesday, you got ISM manufacturing at 10 a.m., job openings, quits, and then you got construction spending. Interesting. Also, you got Mr. Powell coming up at 2 p.m. So there's some decent data, in the morning that can move things Wednesday morning. But I think what's more notable will be Wednesday afternoon when Powell speaks on the federal funds rate hike. Now, the thing is, we're expecting them to do a 25 basis point hike. It's pretty much baked in. Here is the look. 99.9% chance. Okay. That's this bar right here. 99.9. Okay. So this is continuing to kind of inch farther and closer towards that 25. So pretty much baked in 25. The question is going to be if we don't get a 25 and we get a 50, if we don't get, the reality is that most likely, I think that the market is pricing in a slight chance that we see, not even a slight chance, but I guess the 0.1% chance is of a zero. I don't think we're going to see that. I think everyone probably could agree that that's based on how the Fed has been speaking, like that wouldn't happen. If the Fed, the way that they've talked the past couple of months, and even the past like month, right? If they actually did a zero, like, and let's say we got a surprise, which is most likely like 99.9% chance of not going to happen, right? But if we got a surprise and it was up or down, right, either nothing or a 50, I think I would lean towards the 50. I think a lot of people would probably lean towards 50 based on what the Fed's been saying. If they didn't and they went with the 20 and they went with the nothing, then obviously it's like, whoa, like that's a massive Fed shift. You want to call it a pivot, it's a pause, but like when the Fed eventually pauses, right, it's not a pivot, but it's, that the whole talk of that stuff will go wild again. But obviously, I think that's extremely unlikely. They're most likely going to do a 25. You'd think maybe the market's kind of pricing in this, I don't say BS, but market's kind of pricing in this, potential shot that we get a 25 and then no shot of a 50. What if they did a 50? Would we get a decent reaction to the downside off of 50? That's kind of my question. Go out to March and, we're 85.5% shot that we're looking at, 50 basis points worth of rate hikes by the March meeting. So keeping a close eye on that when it comes to Mr. Powell and the Fed, but that's what we got set up for this week. So you got that on Wednesday. Okay. Then on Thursday, right, you got your Thursday trading action, whatever Wednesday is, the market's going to go wild up or down because of Powell. Most likely there'll be some volatility. We'll see. Then on Thursday, you're like sitting back like, all right, let's go and get rocked with Amazon, Apple, and Google earnings all in the after hours. If they're all good or all bad, or if they're in somewhat of a consensus, market moving, massive market moving potential right there. So we are ready, man. We've got a lot coming up. So we'll see. It feels like momentum was shifting quick last week from AI stocks to EV stocks. That's the hype. AI and then Lucid. I'm curious to see how Lucid and curious to see how AI, those two tickers, end up playing out this week. We'll look at those two charts here in a sec. Micron puts looking juicy. Top of the range, 65.50. Futures of natural gas down 6. Yeah, natural gas, I saw that. They're down another 6%. You can't make it up. Let's pull them up and then we'll dive into some of those charts. They're down 6%. Yeah, we're in, it's just like almost like, a lot of the stocks and even the Tesla chart from about a month back, you go into this period of like, oh, you broke down, you got these lower highs, and then you broke down and just got destroyed. You're going to get a bounce. The thing is, right, you're going to get a bounce and it's coming. You just have no idea when and from where. That's like the whole game of the whole, of nat gas and going along a falling knife, obviously. So if you're looking at it from a macro perspective, it's one thing. If you're looking at it from a weather perspective, it's another thing. And if you're looking at it from a technical perspective, I think around the 250 area would be the spot for me. It's like, hey, like if we, dot no bounce through here, oh man, that's not a great look. And I just wouldn't want to be, part of a long. I'm looking for it to do something in here, see if we get a little bit of a bounce action around this 250 area. But we'll see. The thing has gotten, talk about crushing longs. Like it absolutely is destroying and crushing longs of natural gas right now. So far this year, and really since the end of last year, destruction. If you have been long nat gas. And it's kind of funny, and oil is not the same, but look at oil, right? Different scenario. Oil is not free falling like nat gas right now. But oil the same way. You had a lot of people who were loving this thing long this whole way up and were saying buy the dip this whole way down. And now you're like, well, it's just not doing much. The thing about oil though is that this is a key spot. We talked about last week. This zone right here, right up into about $83. Over 83, 84, and we're like, it's like 83.50. Over that, and I'm like, whoa, look out, because oil, I mean, this is just setting up for, your lower high rejection to the downside setup here. But the thing that's different is that you have these higher lows. Okay, you got these higher lows, which is the difference so far. So if you can hold a higher low, ideally above like $77 on oil, this looks like it wants to eventually break through that 83.50. But obviously, we got to hold a higher low, and we've got a bunch of wicks up around 82 from last week and the week before, and we're rejecting. So for now, it looks like it wants to do this, but we'll see what happens this week. And if we get a change or reaction there, gas prices have been popping on up, so keep an eye on that. Obviously, oil will be a pretty big piece to that puzzle. If you rip through the upside here into this next week, gas prices will continue to go up, and that probably becomes a bigger story into the next couple of CPIs. This CPI, not really super concerned about it, but maybe, the next CPI and the one after that, we can start talking a bit more about that, because it seems like this could be, a notable move if oil breaks to the upside here. So that's the deal. Huge fire at oil refinery in Iran, probably going to boost oil. It's funny how some of those news events do, they do move things, but it's funny sometimes how some of those news events do the exact opposite, or there's not much of a reaction sometimes. All right, so let's pull up some of these stocks. I was looking at ticker symbol AI. I feel like it's like the most easy, like when it comes to a AI stock, someone goes, well, AI. Oh yeah, AI, the ticker symbol, right? It's easy enough. Right here, like $18, pretty much, just under $18, which we just hit. Fill the gap right there. So this is the key spot in my view. I'm going to draw a level right there at this gap fill. I guess you can put it towards 18. Over 18 on AI, gets a lot more interesting, but it's got to ideally stay above, in my view. It's got to stay above that level. If not, then, let it do its thing. Maybe it consolidates, or something before the next leg. So I'd be watching this pretty closely if it wants to go for more, or if it wants to just consolidate here before the next leg. Close very, very strong on Friday, so we'll see if this wants to continue. Tons of insane volume on Friday as well. So the volume is certainly there. Gap is filled, but we could be looking for more potentially. I know people are definitely looking for more in the AI stuff. And then Lucid, right? So you have Tesla popping off, and then Lucid. We talk about Lucid. We talk about a lot of these stocks that got destroyed, right? But when you look at Lucid, you're like, this is a ticker symbol that has been annihilated. And if you were in, in this thing short, under like $10 after the move it's had, you're at some point asking for trouble, because yes, maybe you don't think it's worth it and whatever, but it has had this massive move down, and to kind of continue these sustained moves down or to go lower, you got to kind of get a little reset or refresh, get people feeling good about it again, only to sucker them back in, right? If it's going to go lower, right? Same time, a lot of people shorten these things. This could be a stock that people are like, yep, short, easy short this week. Get ready for the short, which could add to the next level of a squeeze. So this thing had a massive move to 1780 on Friday. It's sitting at under $13. the 200 moving average is just under 15. Let's see it get above 15 again. If not, it's a no-go for me. I'll watch it, but I'm not even interested in using this to even guide like an FSR or other EV stocks out there. And then there's another ticker symbol, EVGO, smaller cap, I believe, smaller market cap. EVGO is let me see if I can find it. It's a 1.66 billion. It's not terribly small, but EVGO, check this out. This move from last week, it's above the 50 SMA. It's making nice strides. 200 moving average is up here towards 780-ish or 775-ish on EVGO. So you want to see this thing building and holding this like 575 area. If it can do that, looks decent for continuation. Let's go to the 1 month chart. Yeah, I would want to see it hold this area right here. These lows that we had last week right here. So 570 or so is the spots that I would want to see EVGO holding. First, some more. Unreal to see a $23 billion market cap coming Lucid double in 2 hours. Oh yeah, it was insane. That move on Lucid on Friday was nuts. I was watching it. And when you're looking, I was watching some of the option contracts too, just how they were moving off the halts and stuff. It was kind of crazy because I think I was looking at the 13 puts. 13 puts at one point were going for like $2. I forget exactly where, but we were above $13 at the time, and then we kept going up and the options were, the spreads widened up and like they were popping back up. So like these options, if you had gotten, you could have snuck, I was looking, you could have snuck in. Now I'm not high, heavy size and stuff, but you could have actually snuck in and gotten filled on puts, let's say like somewhere in here. And like, even though it went higher, those puts, if you had limit order set, like some of those puts were getting taken out for a higher premium despite the stock going higher, which is kind of crazy. But that's what happens when you're on parabolic like that. The freaking options just go, what the frick? And then they start exploding and the spreads open up and no one has any idea what's going on. If long shoot up to hold past 8 EMA, 50 SMA and the 200, they deserve the pay. Hey, I mean, so far you can't say that on that gas. Okay, yeah. You can't say that, at least on the overall, from an overall market perspective, right? If you're looking at the overall market right now, and let's look at SPX, it's funny. I've been seeing a lot of stuff, and it's just absolute, horseshit on Twitter and stuff, which is why it's like some of that crap is just, it's horrible. But you look at this stuff, and you got a lot of people on there, and a lot of accounts, large accounts that have done, grown their accounts substantially this past, year because they're bears or whatever. The problem with that whole argument, or the problem with being very one-sided, is obviously, yes, it's useful when you're right, but the problem is that it's not very well done or well educated when wrong. You got a lot of people on there who are short-term traders who are like extremely bearish about the overall macro economy, who have absolutely no fucking idea what the fuck the macro economy even means. You're a trader, right? But when you come in and you post all the bearish put flow and this and that, since the past couple months, and you've been bearish, or you've been saying how the market, the economy and the market's going to crash and burn, since 3,700 on the S&P. The problem is that with a lot of these people and a lot of accounts in general, what's the reality? Most people, okay, they don't day trade. Most people are not day trading freaking stocks or options. No one's doing that. Maybe if you're got a huge gain or hit a stop loss on the first day you entered a position and you happen to check in, yeah, sure. But most people are not day trading these things. And so when you follow accounts like that are like trader accounts, and you look at them, and the reason why these accounts grow is because they post their gains. And they post their gains, and maybe they're good, maybe they're bad, maybe it's fake, who knows, right? A lot of stuff is bullshit, right? Anyway, but either way, let's give them the benefit of the doubt and say that they are actually making great money, or they're doing very well off their market. A day trader who's able to adapt on the fly, scalp this or scalp that intraday to make $1,000, $2,000, $5,000, whatever the number is, a couple $100, whatever, and then post those gains, and then go post all the bearish, setups, and post like, this chart right here. And then all you got to do, right, is just adjust your line a little bit and go, oh, we're fucked, we're going down. And you keep the bearish argument going or whatever. The problem is that, you're not teaching people how to handle stops and how to handle losses and how to, what do you do when you stop out? What do you do? Like when you're wrong, what do you do? So it's kind of crazy, the stuff I've been seeing. I laugh, and it's not even because like, oh, look at, oh, I thought the market was going to go up. I have no freaking idea what's going to happen next. I don't really think it matters in my view for the trading aspect of things. Like, who really cares? Big picture macro, like what happens the next 6-12 months, it's probably going to be dictated by the data and the Fed anyway. So it doesn't really matter. Like, you can kind of guess, but you're still making a guess. You're making an educated guess or whatever, but there's only, a couple different things that can be proven. And the way I see it in the short term is, you have your systems that you can figure out that work for you, that you can, duplicate every single day or week or month, that work for you no matter the market conditions. Like, that's a system that you can create. Or you can have the long-term approach and say, hey, we go down, I'm going to buy some stuff. And then as we kind of inch back up, I'll trim out at a margin, or I'll get, I'll sell some things. I'll sell higher beta stocks. Or if I happen to buy Tesla sub 125, maybe I'm trimming some Tesla off right now. You can do like play those types of games or sell covered calls or whatever. And so you can do those types of things and have a much more longer dated approach or longer dated view. But the stuff that crazes me, that amazes me, and just knows, and to me, what I'm seeing right now is that a lot of people are getting burnt, but I think that the potential pain can be a lot bigger and a lot worse if we ended up this week higher. If this happens, holy shit, the pain. And people are like, you go on the bearish side and you say, oh, well, the bulls are going to get slaughtered. It sucks. If they are buying this dip with this macro economy and all this stuff, they deserve it. I mean, fair enough, but the reality is that most people are not necessarily saying that. I'm not going around and seeing that everyone's like bullish as hell and thinks that we're great and we're going to get a soft landing. I mean, there's not many people out there that think we're going to get a soft landing from the Fed. That talk might start to happen more, especially if inflation numbers come down, and which we'll talk about here. But if these numbers keep coming down and we're like a sub 5 or a sub 5 CPI, going into, let's say, I don't know, May or April, May, whatever meeting that is, and we're like sub 5% CPI, and oil is still staying relatively low, that's not spiking up, and everything looks good, and the job market's still pretty strong, and we haven't seen big hits there. Yeah, the talks of a soft landing will certainly be out, people will be out and about, right? But I think a lot of us know, like, there's no way to know. Like, we're seeing a lag, and we're gonna see a lag in the job markets. The question is how big and when. Anyone who's sitting there saying it's going to be this or that has actually no idea. Like, we can make educated guesses, but we don't know. Like, it could change. It might not be that way. This may happen. This may not happen. What if this? What if that? Like, you got to be ready for both sides, I think, at least at this time. So while everyone's talking overall market, like, oh, breakout, fake out, it's a fake out. I think a lot of people think it's a fake out. I think we're going to go up to 4,100 and reject. This week could be a big moving week, obviously, with the CPI, and not CPI. We have the Fed on Wednesday. You got massive Apple, Amazon, Google earnings on Thursday. Come Friday, and those are after hours. Come Friday's the day. We're going to have a pretty good sense of direction. So, I would say maybe it wouldn't be surprising to me if pullback early week. If that's confirmed, Fed and Apple, Amazon, Google earnings will confirm that by Friday, and then we go lower. If not, if that's a fake out, or if that's just kind of a pullback for the bigger move, then by Friday we could be ripping back to the upside or squeezing out. Maybe it's not a legitimately sustained move, but if it squeezes out people who are staying in shorts or stubbornly staying short or whatever, then that's where the pain is going to be, and we'll see. I think I talked about the AAII sentiment surveys. I'll pull this up really quick. It's gotten better, for sure, but the last one on the 25th, I thought it would be better than this, to be honest with you. And if I saw this AAII sentiment survey come in, it's just overall market sentiment, where people think the market's going to be in the next 6 months. If this number came in at like 35% bullish and like 30ish or less percent bearish, I would be much more like, oh, okay, I would feel a lot more, not gonna say confident, but I would be much more open to the idea of a pullback and stuff. That kind of sketches me out that we actually saw a pullback in bullish sentiment and an uptick in bearish sentiment week over week. No, it's just 1 week, whatever. But I kind of wanted to see, especially with the market kind of inching higher this past week, I was thinking that we would probably see sentiment on the bullish side increase, but it didn't. It actually came back a bit, and bearish sentiment popped up a little bit. Nothing crazy, but it did pop a bit. So you're still got more bears than bulls, generally speaking. The historical averages are down here. We obviously are generally historically much more bullish than bearish. Or not much, but just generally over time, more bullish than bearish, nature of the markets and all that stuff. But watching this like super close, not that it matters like super, like a ton, but it's a good gauge to kind of get a feel. I think we're kind of in a weird no man's land point. We start going 30-40, let's say, on the bullish sentiment, and sub 30 on the bearish. Now we can start to say that we are swaying much more towards the greedy side, and now we can start, feeling that maybe we got pull back in store here, but we're just from a sentiment perspective, obviously other reasons to move down or up, but I just don't feel like this is very useful right now, right? On a short-term scale, I just don't know if it's super useful right this second, but we shall see how this develops. And this Thursday we'll get the next one for the past week, so we'll see. I'm up through some comments. Let's see. Lucid not going back over 15. I don't know. I mean, I would think if I had to take a guess, I would say Lucid does not rip up. But I wouldn't be. I could see both sides again. Same way. I can see a squeeze out if it starts squeezing. Great, cool. But I would find it hard to believe that this thing continues at that pace without a substantial pullback. And maybe it goes $20 at some point if the market wants to rip, eventually, but probably needs to pull back and consolidate first. You would think, but who knows? Mara, let's check out Mara. I mean, Bitcoin's up a bit, but it's pulling back. I guess it pulled back with futures a bit, but let's see. Mara needs to get back up over this 930 area. That's the spot. Over 930 on Mara is the next leg. GP, Green Power Motor, right? That's the company. Yeah, what are they at? Oh, they ripped. GP, interestingly enough, popped up over that 200 moving average. So your risk right now is like 330. Like that's your spot on GP. Holds 3. They got earnings coming up though too. Be careful. This is an earnings on, what is that? The estimation of Wednesday the 8th, so next Wednesday. I'm not sure if that's confirmed, but yeah, that's not a bad look, to be honest. Right there on GP, if it can hold that 330 spot for more, it's a beautiful rip off the lows. It's up a lot though. It is up a lot. GTII, naked shorted, popped hard a little bit on Friday with some good volume. Yeah, I mean, this is kind of a $2 is kind of the spot. It looks like $2 is like, yeah, we've had a lot of interaction around that $2 area. You can draw a nice zone right around 2, like this whole way through. Like, look at this, give or take like 10 cents off the $2 area. I mean, resistance the past couple times he got there, support back in here, back in October, resistance back here in May. Geez, it's a pretty interesting looking chart. Hoping EV's pushing AYRO to 1. Let's take a look at AYRO. How does that chart look after last Friday? Yeah, I got a nice push on Friday. Just tapped that 200 moving average with some nice volume. If that continues, though, this thing could definitely get to 1. I could see it get to 1. They've got some cash. We talked about them before. They've got some cash. Super low market cap. Market cap is 27 million. I think they got more cash than that from last time we checked, or they're up there in terms of cash position-wise. So a little bearish on semis. Intel's report was horrendous. Yeah, I'm curious. AMD will be big. So AMD on Tuesday after the close should be pretty notable in terms of semis. So we'll be watching that one. Let's check out AMD's chart, and we'll pull up Soxel. Not Soxel, we'll pull up SMH, the semiconductor ETF. Essentially, it was same thing. So AMD is kind of struggling to get up here. It's trying to get up over this like $77 area. If it gets over 77, I still like it for a long to like close to $80 because that's what the 200 moving average is, and you got rejected around 79 a couple times. So from like 77 to 80, there's some room in my view, like if it can get up there. But obviously earnings, will be the big player on Tuesday. And so as you start getting closer to earnings, do I really necessarily care to trade it? Probably not. Maybe Monday, but probably not Tuesday, because who knows? It might just do its own thing on Tuesday going into the earnings. And, you tend to just not really care. And everyone's waiting for earnings anyway, so you might not get the best reaction. We'll see, though. It obviously could get some moves. But we'll see. If I go to SMH, the semiconductor ETF, how is she looking here? So it's getting close to that next key spot of like this 245 to 250 area. Really 247-ish is like your nice resistance level on SMH. So you want to see it. I mean, ideally you'd want to see it reject up in here and then fall back off, and if you're looking for shorts. But we'll see. It's getting close. Maybe it gets a push early this week, and then AMD has a say in that maybe on Tuesday, Wednesday. Took profits on half the Soxel position last week. That looks, I mean, that's the way that I like those 3x ETFs, to be honest. And sell covered calls against them when they're doing good, and also when the time comes to lock it in. Obviously, I didn't sell any of mine. I don't have like a crap ton that like I need to worry. Like I feel like too much. It's not like a huge overweight position, but the view that I have is simple, right? If we were to go back down, I'm fine with that based off selling covered calls and whatever. It is what it is. If we rip from here, break that 200 moving average, the S&P breaks out, we get a ripper for like a month or let's say a couple weeks. I don't know what the time frame is, whatever. We rip for like a week or two, maybe more, and we get some big moves, which there's a lot of stocks, a lot of beaten down things that can make those types of moves. If that happens, we've kind of been making a slow, steady grind. If we get that freaking ripper and it's like almost parabolic looking, like to me, that's the time. Obviously, you can go higher. You're probably not going to get the best. You're not going to top ticket. You're not going to get the top, whatever, but you can get a good chunk of that move, lock it in, and they served my purpose of why I had them as essentially an upside hedge, right? Almost. I was like, hey, if we rip face and I have no exposure to anything that's like somewhat risk on or somewhat, I guess, going to capture some of that upside, I don't want to be sitting there with nothing, so I'll play the 3x ETF, sell covered calls against them. They rip, I sell them, and then I'll just hold that cash once I sell them or whatever and, look for something else, or just hold the cash for an hour, toss it into a dividend play, and then be able to mess around with that at some point later on. But that's kind of my thought is like, probably, dump some of those and then toss it into like a JAPI or, something like that, a higher dividend yield name when the time comes. If I'm like sitting back, like I just feeling like I have no idea what's going to happen, maybe throw a hedge on them. I was thinking about that last week. Probably would have been not a bad idea to do on Friday to grab a hedge, go out a month or two for a hedge, but I didn't do it yet. It is what it is, but I'm looking for a bigger potential ripper before I want to hedge, just because I think the upside potential is still impressive if we keep kind of, I don't want to say proving bears wrong, but if we keep inching higher, you're going to have a period of time where people start going, whoa, do I buy this shit now? Like if you look at the SPX, and I just don't think that we're obviously the threats of downside. You ask anybody who's a bear, they're like, oh, lows can come anytime. Limit down days are coming, whatever. I mean, who knows? You can't, you can say all the limit down day crap. Like the limit down day stuff, I think is absolutely insane and boggles my mind. If you hear anyone talking about that stuff, like no shit, it's a potential possibility any day. But you can't call, like if you're trying to predict a limit down day, you are an idiot. Like in the COVID times, that's one thing when things were going like no one had any idea what's going on. But like you're trying to predict, someone who's trying to predict a limit down day right now. It's like, yeah, I've seen tons of people who have been like these bears the past couple months, from the October lows that think we're going to go lower, and which we may very, very well do, have been calling, I wouldn't be surprised if I see limit down day. It's going to happen, capitulation, all that stuff. The problem is that like you are looking for the black swan. You're looking for, there needs to be something that comes out of absolute left field and slaps us in the face, which like could happen at any time. Like that's always a risk. And that was like the COVID risk. That's going to happen any day. Like there could be any, like the whole Russia-Ukraine thing. Like when that happened, everyone's like, holy shit, market's dropping. Then it ended up ripping back up the second half of that day. I mean, like that could happen at any time. Like we can get a limit down day because of some news or something that happens like elsewhere, whatever, at any time, So trying to call that, I think is wild. You're at, just like anything else, you're asking to get blown out in the short term and then be right at some point, but just maybe 6 months after you thought it was going to happen, you were right. You'll say you were right, but you lost, or followers lost a ton of money who followed you or whatever. That's just kind of the whole name deal. But I mean, if we ripped to the upside here, I mean, I think that 4,100's key first and then 43. I mean, there's 4,200, I think, as well, but I think 4,300 will be the next spot. So like my lookout will be like, hey, if we were there, that's where like, okay, all those 3x ETFs are gone, or they're at least getting trimmed off substantially. And that's it. And then you can maybe look at, then I would look at hedges. In terms of hedges, like I'm not a huge fan of it right now overall in like a bigger portfolio. Until maybe we started cracking down, underneath this level. And then I would look at maybe like an individual stock or an ETF or something like that at a hedge. But I don't know, I'm just going to let it do its thing for now, personally. And just kind of, if, we could be in this no man's land for a while and hedges or longs, everyone will get kind of slaughtered, their options get slaughtered. So just let it do its thing for a bit. But that's kind of my, like, I don't want to say unbiased approach, because everyone has a bias, I guess, at some point. My bias right now is more so that anything could happen, and I'm very, very well aware of the potential upside that we could see if we keep rallying, because no one believes it's going to happen. And at the same time, we are teetering on, that next leg, next drop, that next big move to the downside, because we're up here. Like we can get a couple days, couple weeks down and have some nice moves. If that happens, I feel like I'd be very, very well aware of, or being very ready to take advantage of that on the downside on the short-term accounts anyway, to take off day trades and whatever. So that's kind of what I'm going to be. I especially when we get trend days down, those are actually some of my better days by my stats. I've been better on the trend down days. So that's my look. That's my kind of take on it all overall. But then again, everyone's got to kind of manage their own positions and portfolios how they see fit. And then, not everyone day trades. That's the thing. Most people don't do that. So you can't assume people are going to do that. So if you're in a scenario right now where you're like an investor and you're like scared, well, okay, trim out of longs, if you're scared, right? Trim out of some longs, hold some more cash, or just toss some of those speculative positions maybe into a higher dividend yield, a less volatile stock that's going to pay you a monthly dividend or pay you a quarterly dividend. That's a pretty substantial number, so that it kind of hedges your downside by the dividend. You know what I mean? That's a good way to do it. There's no reason, I think, right now to just start, getting ahead. And obviously you can hedge yourself with some shorts, but trying to go overly bearish and start putting in fat put positions, going out 6 weeks, or going out a week or two, like, you're asking for trouble, especially if, we just kind of inched higher, or we just chopped around for a bit, which would be, an easy way, as we've been seeing, to burn people alive in this market, burn people alive playing calls, puts, because premiums are popping off and from puts at least, and those premiums can get burnt pretty fast. Pretty fast. TSM got bad earnings. Let's take up TSM. Taiwan Semiconductors. This thing popped, or it's kind of flagging here. Went up. Never know when the market's gonna react. Yeah, it's interesting. So you can look at the earnings. The earnings stuff is hilarious too. And you look at people who are crying about the earnings after the fact, where it's like, I can't believe the Microsoft thing. Yeah, Microsoft. They pull up the PEs. They pull the PE. They pull these numbers. Essentially, Microsoft telling us that they're not going to grow anymore, and it's up. Yeah, you're going to get screwed. All the longs are going to get slaughtered. I mean, yeah, maybe they do. I don't know, dude. But like the problem is the stock is going up. So if you're putting that out there, right? The reality is that you have no idea what's going to happen. The market can do whatever it wants to do. If you went short post earnings on Microsoft and now you're crying that it's up because the earnings were bad and now you're like, it doesn't make any sense. Well, no shit. The market doesn't make any sense half the time. You know, who knows how much was discounted? Who knows what's going on right under the surface? But if you went short Microsoft here and you're still holding that short, you know, you're freaking... You got blasted already, and you could be getting ready for the next level of a blast if it goes over this 250 on Microsoft. So, you know, the bias without a stop loss is, you know, I mean, I was there like a year ago, man. I mean, I did that stuff too, and it was so stupid and just was the worst thing. You know, you're just burning money. It's like I was just burning money alive, like for no reason. There's no need. NVIDIA is very strong this year. NVIDIA is a beast. That's a stock that's been killing it. When is their earnings? Earnings is coming up into like late February, so it's got like a month to go there. They got this level right here that I'm looking at up, and it's over $200. I'd say up to about 215 or so. There's still some room on NVIDIA if it wants it. It's been really strong. It's a stock that if you want to look at to the long side, up into the 215 area, I think is fair. And after that, there's some gaps to fill. I mean, there's a gap to fill up here to 230, a gap to fill up here to 258. I mean, that would be an incredible move to the upside. Probably will need to have some earnings or really a strong market to get there. But I mean, those are the spots I'd be watching next. I mean, this is a rocket. I would want to see this thing pulling back and doing something, just chilling for a bit. I mean, just so far this year alone, the stock's up $60. And it's not even a month in, you know, the stock's up $60, which on a percentage scale, the thing is up 45%. Whether you realize it or not, that's crazy. Crazy. Caught some fat dips. This one wasn't nice. Smoke or drink? I'm not really a big. I don't smoke. Not a big drinker. I'll have a beer, or I don't even really like beer, but I'll just like socially sometimes we'll do it. And then like when it comes to what I like is like, dude, I'm a freaking frozen margarita guy, like left and right. Like that, if I'm going to have a drink, I'm going to go to a Mexican, like if I'm going to drink, right, it's going to be at a Mexican restaurant. It's going to be the frozen margarita. It's going to be like, that's the type of deal. That's where it's going to be. But it's not going to be like to the excessive points. Whether you realize, believe it or not, when a Penn State, I guess I've had times where I've been, you call it tipsy or whatever. I've never actually gotten drunk to my knowledge and felt like, I just never was interested in it, and never like it just never. I never got to that point. Never was pushed to that point. Never felt like I needed to do that. So I'm not a big drinker by any means. And then smoke. I don't smoke. I've just been scared. I've just always been scared, like from the lung perspective. I know everyone's like, everyone has their own take on that and their own perspective of it. But if I've done edibles, like if I'm gonna do weed or anything, it's gonna be edibles or anything like that. But I'm not a big edible guy. I used to be kind of like doing them like a couple times a month, but now it's like the Delta 8, so the stuff that's illegal, it's not, I mean, you can get the real stuff I guess anywhere, but like they have the dispensaries nowadays, even in Texas, where you get the Delta 8 stuff that's illegal. I mean, this stuff rocks the freaking shit out of me because my tolerance is nothing. So, but I haven't done it. Honestly, it's been over a month since I've had an edible. So I don't know. You know, I've also had some bad stomach problems with like beer and stuff. My stomach is I guess it's kind of sensitive. So I just kind of, just keep it simple and do a lot of just keeping, stuff pretty basic and whatever. But, yeah, I mean, I feel like I've never talked about that at all, but nothing against people who do. I mean, I don't care, but that's just my take. Don't smoke, don't drink, or any drugs. Yeah, I haven't done anything like insane either. It'd be fun to do, like go to like Amsterdam one day and, do some stuff and whatever. But like, I don't know. They have a trip one day to do. Boomin caught some. Okay, talk about that. SMA training some resistance. Don't be a gambler. That's the problem. I think that it's the way that things have kind of been is that people are almost in this. People are getting this feel of like it's not gambling, but it's gambling, right? I was there. It was as someone who had a sports betting problem in college. Yeah, I was definitely there. I felt that, and I've been there in the stock market as well. And I've come to the point now where I'm like, dude, there's just no point. Like, I would and I've just been seeing it through the past like couple months of the day trading and tracking the day trades and trying to build a strategy that will work for me that I can replicate. I'm like, it's actually sick. I love looking at data. I'm not a coding, like I'm not a big, like I went through the whole, programming and all that stuff. I hate that. But when it comes to looking at it, visualizing it, analyzing it, and making decisions off of data, oh man, that's what I love to do. That's why I love charts and stuff, because it's like I don't really care about what goes into the charts, like what's behind the scenes, like what the fundamentals, like that's all great and cool. But like, what is this chart telling me? And then like, what can I utilize from the chart to make a potential prediction off what's going to happen next? But with a risk parameter in place, like what would be more likely to happen next based off of the past history, make that play, make that call, stick to the risk. And then as long as I have, whatever the number is, okay, I'm right half the time. Cool, right? That's great. I'm right half the time. As long as I'm right half the time, but then I have a better risk reward profile all the time, then that's a great strategy. So I just find that that's much more fun, much more enjoyable to me, at least as of late on the short term side of things. But gambling is for a lot of things. I'm like way up on the chat. I'm coming down. I'm moving down. One of the worst things, to be honest. Yeah, no, I mean 100%, because it's easy to kind of get yourself into that and start hoping and praying, and it's fun. It's I won't say it's fun, but like it's fun at times when you can kind of get into a rhythm, or you've got a group, or when you are like essentially think about this, right? And when you're a sports better, right? You want to root for a team to win or whatever, or I guess the spread or the over, the under. Like you're kind of with a bunch of people who are doing the same thing as you. Like you're all like, okay, we want this to happen. Let's go. When you're playing the stock market, it's like the same thing, right? You're all in shorts, you're all in longs, you're all in this, you're making directional bets. Like you want this, you want that, you want this. And so you kind of fall, and you will end up like your attention and your focus, you're going to start seeking those things out subconsciously initially. And then eventually you'll start to realize it, but then like you won't really care. You'll just keep going back to it. You'll start seeking it out. So it's no wonder that people who are like, oh, you know what? Screw this. Market was down this past year. I'm going to, be done with that. I'm going to start playing the downside. Screw that. You start reading into like the bear case. You start reading into like, oh my gosh, like the really big perma bear guys. You start reading into the end of the world stuff. You start reading into the end of the financial system. You start reading into all that stuff. Like that's what you'll seek and you'll find. Now, of course, like, is that stuff like a threat? Like, sure, it all is a threat. Like it's not, I'm not downplaying a lot of it, but the reality is that in the scope of what's going to happen or what is more likely to happen, like some of those things are much more or much higher. There's a higher unlikelihood, I guess, that they'll actually happen. And we end up coming somewhere in between. But like there's a lot of people who end up kind of fluctuating towards one of or those two opposite ends of the spectrum. And that's where you find the most extreme people and the most extreme groups and the most support for what you're looking for when you kind of find yourself into that crowd. And social media these days is obviously a great place for that, because it's very easy to kind of get segmented into a group based off of different algorithms and whatnot, or just based on who you follow and stuff, to kind of go that way or go this way. And whether in sometimes it helps, or sometimes you feel like it's helping you and sometimes it's hurting you. The reality is that I've just found of the past, I don't know, since 16 that I guess I started getting into things, and looking back over my past, like I don't know how many years, I'm like, it just doesn't make sense. Like markets generally do one thing over time, and those opportunities when things are horrible, you want to be buying solid companies or be buying diversified ETFs, dividend ETFs, and you'll be good, longer term. And like that's kind of a strategy, like no matter what, even if we go down 75% on the S&P for the next 10 years, or we dump, it probably won't happen in a 10-year span. It'll probably be more like choppy in between, like big days, big years down, big ups if that happens. But just like anything else, like that's like one part of the game, and that's fine. But then the other part of the game, in my view, is like the actual trading side, which you can take advantage of patterns, take advantage of stuff like you see. And if you have a strategy and a system of risk management that makes sense and that works for you, that you can replicate every single day, then it doesn't really matter if the market's going up, down, left, or right. It's an income producing skill or asset, if you want to call it that. That's kind of where I'm, I guess, I've been led by myself or by my findings, by my wins and losses, and just market experience, I guess, over the years. Let the market and charts tell me when the stocks are going. Have no bias. That's the way to do it. I think that's the way to do it. No one knows. Place your bets, have your stop loss, you'll be right or wrong, especially this week. Yep, this week is going to be an interesting week, especially. I mean, the thing is for people talking about blow ups and stuff. Yeah, I mean, the reality is that a lot of these names have got some good relative strength. Let's start running through some of these other tickers I want to pull up. I want to pull up Shopify first as a risk-on stock. Shopify is an interesting stock. They have earnings coming up in about a month or a little under a month, 3 weeks from now. Shop over $50 looks really juicy. Shop is a beast. This thing, they just changed their pricing structures on their platforms. They upped the prices in the stock. Just freaking loved it. They ripped it up, and now Shop's at over $50. This thing has potential for more. I mean, we'll see. There is a gap to fill all the way to 85 or 84. That's a long shot from here. That would be insane. Don't underestimate it, though. I would not underestimate it, especially if the market is going to be strong. Another thing we're also noticing, now these are indicators that you probably will see people talk about, especially if you find yourself with that bias. If you're seeking out the bullish bias, what are you going to start seeing this week and next week, or even what maybe you start to see? Bullish golden crosses, where the 50 moving average crosses the 200 moving average, or really any short-term moving average crossing a longer-term moving average. So the orange line on my chart here is the 200. The blue line on the chart is that 50. We just had the 50 cross back up over the 200. What does it essentially indicate? It just indicates positive momentum right now. We've got positive upside momentum in the shorter term and the longer term. We've had these longer dated downtrends and this longer term negative momentum, but that's now being kind of flipped, and we're getting short-term momentum that's positive versus negative. When we got the bearish cross, the death cross, if you will, right? When we got that, which was back here, we already had dumped off the highs. Like it went from 175 at the time. We were down here at like 105. So it was down a lot, Shopify was, right? But it still went from 105 all the way to $23 at the low. There was still a lot of meat on the bone. The question is, I don't think anyone believes this to be the case. The question is there going to be legs? Will there be legs to some of these bullish golden crosses where these shorter term moving averages cross those longer ones? We'll see. That's where Shopify's at. I think you're looking at a lot of other stocks, like let's say Upstart, for example, not even close. But let's look around, like Snapchat, not there yet. SQ, Block. I mean, Block is close. The 50 is right here at 72, 73. The 200 or the 200 is there at 72.30 or 72.45, and the 50 is at 67.59. So it's like $5 away, off of a potential bullish cross. Indicates that, hey, from a swing perspective, some people like that. Momentum perspective, it's a good sign. I guess from an indicator standpoint, it's cool and all, but what it really just means is that, yes, we've already seen good price action the past, couple of weeks versus the past couple months. 50 moving average is kind of like an average of the past couple weeks. The 200 is like the past couple months. So where have you been from the past couple months versus the past couple weeks? And the past couple weeks, much stronger than the past couple months. Obviously, we get these bullish crosses. So we'll see, if that's... if this stuff continues. But I want to pull up SPX again because we are looking at a very, very interesting spot. Unless we absolutely plummet this week, there's a very good chance that this week, or at least into the next week or two, we're going to get that bullish cross. Now, will it actually sustain and confirm? That is the question. And I don't think anyone buys it yet. But that's my other question I pose is this. You get past this week, right? You get past this week, you get through the Fed meeting. They do a 25 basis point hike. You get through the monster earnings, Amazon, Apple, Google, and plus everybody else before them. You get past this. And let's just say, we're alive. Like the market's over S&P's over 4,000, right? We're somewhere up in here, right? What happens? Are there going to be that cash from the sidelines? Like, is that cash, or is that some of that cash, the big money, whatever, is some of that money going to come back in? Is it not come back in? Obviously, if we dump off, it's not. But if we just sit there, what happens? Does that money come in, and do we have legs for more? Like, that's the question I think we have to start thinking about, because I think a lot of people are like, okay, this is the week. And then it's like, at some point, if the market's resilient, like now what? Because there could be a bigger opportunity cost from a big money perspective of missing out on a potential rally, even if the rally isn't going to all-time highs, right? Of a rally up into this zone over like a 6-month span or a 3-month span, then not. So I don't know what the idea is going to be there, and if we see a big sentiment shift on the street based off of maybe sentiment off CNBC and big funds, and we start seeing the big boys start talking about going long again and this and that. I'm really interested to see how that plays out. But that will be kind of by the end of this week, we'll get a good feel if we somehow survive it, which is a big if for sure. But, yep. MSFT just following the trend like INTC. INTC, I pulled it up for a second. I didn't really talk about it, but INTC had an incredible Friday move. Thing opens up around $27. It closes up around $28. Pretty big move. Gap to fill all the way up here towards about $29.25. So still some range for the gap fill, but kind of had that gap down off earnings, and a really big, just ripping dip buyers came in all day or all morning off of INTC. So curious if that continues. Kind of has that Microsoft feel almost. Wednesday, J Powell can make us rich. I mean, he could definitely he can do a lot of things. He can do a lot of things. Food stocks run hard end of January last year. BSFC up 34% after hours out of nowhere. Small caps, dude, let's see. BSFC. They've still been pretty good. They've still been looking good. And that's the other side of things too, right? Yeah, look at the volume. That has been look at that. Even if you eliminate the volume on Friday on BSFC, I mean the volume from the beginning of January, there's been like a little pop right here. Okay, whatever. But it's just generally been higher, even if you kind of discount Friday. Pretend that Friday's volume, which is obviously exceptionally high compared to what it's been, that relative volume isn't perking up. So that's the key. I mean, you're looking at that relative volume. A lot of these things that are hitting these lows, those are the ones with the relative volume. They're getting the volume before they rip. And it's been fun to watch some of these stocks go for it. So I would keep an eye on that one for potentially 50 cents plus, maybe more than that. Stocks worth whatever Wall Street Bet says it's worth. No more hikes. The thing with the no more hikes scenario, right, is if you look at history, now does it have to happen? No, but it's like 80-ish%, something like that, from what I've been seeing, is that when the Fed actually pivots, which is not going to mean a pause. Like a pause and a pivot, I guess, are two different things. Fed goes from rate hikes to pause. Like there's a very low chance that they're going to go like, let's say the Fed does a 25 this month, and then let's say that they paused in March for whatever reason. Let's say data came in, it was really low and whatever, or let's say the job market starts, getting a little worse or whatever, and they decide to pause in March. Let's just say, or it could be the next month after March, whatever, next meeting after March. If they did that, there's a good chance that they're going to probably pause for at least, 2 or 3 meetings, and they're going to kind of remain steady. And then they would cut, 3+ meetings down the road. The question is, how far down? Is it going to be a year down the road? Is it going to be, 6 months down the road? Who knows? We'll cross that bridge when we get there. How Powell sounds on Wednesday is going to be pretty, telling. The reality is that I don't think that Powell wants to kind of take that a victory lap yet. And by Powell taking a victory lap, right, he's got to kind of come out and be like, hey, we got inflation kind of under control. We're in a good spot. They have had no indication that they've been saying or they've been feeling like they're going that route. They've kind of like made no indications that that's where they're at. From the Fed's perspective, right, and Powell's perspective, and from all the FOMC members. So the question now is like, okay, fair enough. When do we start getting that sign? And in the meantime, does Powell want to try to walk the markets lower based off some of his talk and based off what he says, just to help get that inflation number, just so we can kind of almost solidify that inflation number down and in the dumps over the coming months so that they can eventually stop the hikes soon? The reality is the Fed, with the current debt in the U.S., like the rates cannot stay high for that long. They will, like, whether you believe the Fed or not, they're going to need to come down at some point, or else, we just simply can't afford the debt that we have. It just does not make it. It just won't work. I mean, I guess who knows whatever happens, like, and what will happen, but it's insane how much money, right? How much debt we have. And then when rates are this high, it's like, holy shit. So the reality is that at some point they're going to come down. The question we're trying to figure out is like when. But when the Fed does make that pivot, history says that we've actually seen some big declines off the backside of a pivot. So the Fed pivots, then we've seen some big moves down. That would be really interesting if we got something like that. If we got a Fed pivot maybe late this year, and let's say in the meantime we were to rip higher, I don't know, maybe we inch higher, pivots like late this year, wherever we're at, up here, who knows if we're up there, it could be lower. We go like this, that's our next leg down. Does it go to new lows? I don't know. How bad is it? Whatever, who cares, right? We'll cross that bridge when we get there. No one has any idea. Anyone saying that they know it's going to new lows has no idea what they're talking about and is making a literal guess. Maybe a somewhat educated guess, somewhat, but it's a guess. Like, you can look around and say, this guy has 1 million followers. This guy has been around for so long. He's got 100 years of experience. Or, that's a lot. Obviously, no one got 100 years of experience. 50 years, 40 years, 30 years, 20 years, whatever. And so you might trust them or their opinions. But again, it's an opinion. And at the end of the day, it doesn't matter because market doesn't give a shit about anyone's individual opinion. But that's where we at. When do you think the Fed pauses? So going back to this, like kind of talking about, like, again, it's a guess. As of now, we'll see what Powell says on Wednesday. Maybe that gives a little bit of a hint, or how like the committee underneath Powell, like on the FOMC minutes that get released a couple weeks from now, how that they feel. My thought is they're going to probably pause May. They probably do 225s, and then May is a no-go in terms of hikes. Not a cut, but they're going to pause May, May, June, July. Good chance we go through the summer. We get to the summer, we get to whatever point in hikes that we got to get to, and we're kind of just chilling there. Then, it's data dependent. So if the job market starts kind of, getting a little worse, unemployment starts ticking up, CPI is like well under 5, gets under 4% at some point in the next 6 months. If we get something like that, then we can start talking about a cut, but I mean, we're not there yet. So let's cross that bridge in a couple months when we get there, and let's get the pause first, and kind of walk our way down. That way, obviously, if CPI ticks up, if oil and gas tick up and start ripping, which is what we talked about, if that starts happening, I want to say all bets are off, but it could be all bets off, and we could get another hike or two in there going out to May, June, for all we know. Depends on the CPIs and stuff. My take on the CPI, it's going to be very difficult to get a positive, to get a CPI higher month over month than the last. Like if we saw CPI for the next month, which I guess will be the month of January, once we get the February CPI, if we got January CPI and it was above 6.5, I mean, I think a lot of us would be very surprised. And then the same after that, I think it'd be very surprising, again, because we're lapping up these huge increases, or these huge numbers. I mean, I think we still got 6+ months before we can worry about that, or something crazy has to happen, either oil, gas spiking off the charts again, or something along those lines to get us to do that. Irish coffee, got to try, best cocktail in the world. I have not. That's something maybe I will try. Once Fed hikes are done, we can be fighting poor earnings. Yeah, that's the thing. The earnings is the other story. It's like, that's the reality. It's like, well, okay, now, market can do whatever it wants to do, but it's like, okay, at some point, you can talk all you want to talk, but you got to have the numbers, and you got to have the data, and you got to have the numbers to back yourselves up on these companies and the outlooks and stuff, and have to make sense for investors, and have to make sense for what they're putting up earnings wise. And so we're going to see, that's the biggest scare, I think, is that, okay, we get a bad earnings cycle, over the coming months. My only thing about that is like, I think that not say everyone tries, but I think a lot of people tend to, I don't want to say front run that, but they want it to happen sooner rather than later. And so you kind of think they're going to be bad, and they may end up getting bad, but it just might take an extra, quarter or two to get some big, misses. At the same time, what do these companies do? Well, they're going to downgrade. They've already done a lot of that. They start to say, okay, we're expecting less for the next quarter, the next, whatever, on this, on that, and they start to downgrade themselves, and they set themselves up for, under, or missing earnings or whatever, or expectations. They bring the expectations down a couple notches. They do that ahead of time. This way, the earnings reactions aren't huge. You tend to see the stocks move lower off of those expectations being lowered, yes, but at the same time, it minimizes the effect of a bad earnings a bit if you get some of that beforehand. Not buying Tesla when it was 100 and watching go to 180 in 3 weeks makes me want to drink. Yeah, no, I mean, the thing about Tesla, obviously it could go lower. It's kind of sketching people out. I can get it. I get it. I was buying the TSLLs, but nothing crazy with size wise, just getting some. And, you know, as it started to fall under 135, I was like, okay, I started to like this more. I'm up like something 40% or whatever off that. I sold a covered call out to February, so I'm going to hold it to then at least. But, we go 200 plus, you know, consider just taking this thing, or I'm fine with this, just taking it off for now. I mean, that's just kind of how I feel. But it's always when a lot of the same story has been like this Tesla waterfall, pretty nasty. But we kind of have the writing on the wall. I don't want to say we necessarily, nothing is perfect, but look at Netflix, Netflix in this waterfall phase this past year, and then it had this massive rebound. Kind of on a smaller scale. Tesla had that type of deal. Look at Meta, same kind of general deal. Waterfall phase right here. Now it's rallying back. When these things have gotten annihilated and they've gotten destroyed, they've had some nice runs back to the upside, individual stocks. And so when Tesla's in that free fall, obviously you have to have a longer term vision on it. You can't be randomly buying, a company or a stock that is potentially going to go under, right? Tesla, I don't think we are at anywhere near that potential possibility at this point in time. But when you're talking about a penny stock, it's a different game. You're not buying a penny stock that's going down and just crashing. Those are sketchy because you're looking at that saying to yourself, this company is probably not going to be anywhere in like a couple of years. So like, I don't know, it's sketching me out. Still, you tend to get these big bounces and whatever either way. But when you're looking at large caps and you get these huge moves down, I tend to look at that and say, yeah, it's, generally speaking, you could not try to catch a falling knife, but buying shares of something, sell covered calls against that, protect your downside, or just start accumulating shares slowly but surely in a longer portfolio that you don't really necessarily care about what happens tomorrow on, and you're more so longer dated, and you're like, hey, I was looking to get Meta anyway, and or I was not really interested in Meta, at 150, but Meta at $90. Hey, like I'm kind of interested in this thing, if I can grab some. Now it's back at 150, I'm not really a huge fan anymore. Maybe I want to trim some off at this point. Obviously you got to take into account the tax repercussions if that's something that you're worried about, if it's something that you're, you got to think about long-term versus short-term capital gains, and everyone right now is like, well, if I bought the dip on some of these stocks and I take my gains right now, I could be looking at short-term capital gains because I didn't hold these things for a year. Yeah. So that's another factor at play, and then the environment right now is like, well, do I want to hold for a year? Because if I got a big move up, maybe I would want to lock that in, and maybe I wouldn't want to take the risk of holding that stock for at least a year because I don't know how the macro is going to be in a year, what the overall market's going to do. Now, that's obviously a thought going through a lot of people's head right now. So it's a much more it's a mind fuck, I think. It's more than like, anything else right now. Starbucks broke out. Let's pull up Starbucks. Look at that. My goodness. From 68 to 109. Big move on Starbs. Not a Starbucks guy. I'm not a coffee guy myself, but you got to respect the nice chart. Getting up to some better resistance, or at least volume resistance up here on Starbucks. You're up into this zone right now. The lower end of the range of this kind of support consolidation from the entire year of 2021 was around 110. So Starbucks over 110, it's going to be kind of from a chart perspective, it looks like it's going to be tough, but that's kind of your spot now. Ton of stocks hitting golden crosses. Literally, I didn't think they're real. Moving averages are based on math. I mean, the thing with the reality of them being real, like they are real. It's just more like, what is a golden, just like anything else, a golden cross is really just telling you what has happened for me lately. It's not necessarily something that's in like trying to predict the future, which I guess is any indicator, but balance. I'm trying not to be a bear though. Yeah, I mean, that's just kind of how I think, I'm not saying I'm open to both sides and I can start feeling it either way, but I'm just going to be cautious right now at this point in time. I still have yet to, I don't really feel like we've caught That's just been my feel and maybe what I'm seeing, but I try to be pretty open on both sides. And from what I've been seeing on social media from a sentiment perspective to get a picture of what's going on, I just don't feel like we're in. You look at some people who are bears and they're telling you that, okay, the bulls are getting excited again. They're kind of giving me some shit in the comments and whatever. Okay. Maybe this is time to start. Well, this never ends well for them. I'm like, yeah, I hear you, but that's because, you're looking at it from one perspective. I look at the other side. I'm not seeing people going like crazy. Of course, last on Friday with the squeeze on Lucid, you got some good pumps on a couple other stocks out there, some short squeezes. That's generally been a time when the market starts heating up to that degree and we start squeezing out and getting some really nice moves. Even if the S&P is not ripping, that tends to kind of line up with some of these relative highs on these bear market rallies. So that kind of gave me maybe a little bit of a signal there. But I'm just not feeling that euphoria at all. I mean, maybe yes, selectively here and there, people are feeling better than had they been. That's just based off of price action. I mean, when the S&P goes up, right, from where it was in October to now, right, that's part of it's just price action, right? Things are not as bad. Long-term portfolios are not down as bad. So things aren't necessarily looking terrible. But I think in terms of that bullish euphoria, I think you need a bigger move. I mean, as crazy as it sounds, you start pushing up towards 42, 4,300. Then yeah. Then that's where you're probably looking, I Gorilla got you on the 420. I love it. BTC keeps ripping, think Coinbase will keep going. The thing that I've been noticing on Coinbase, check this out. So Coinbase, we talked about, I think, Friday. Coinbase is at 61. This kind of broke out a little bull flag that we had on the past week or two. 200 moving average is at 66. You could be looking a little more upside, top of the range from 2022 with this bunch of highs up around 75 to 80 bucks. That's kind of a good target, I'd say, 75 to 80. The thing about Coinbase, though, is it's sitting here. It's kind of been leading Bitcoin, and then it consolidates. Bitcoin kind of pushes up, then it consolidates. So I kind of been finding that Bitcoin almost lags Coinbase, if that makes sense. So Bitcoin's here at 23.9 right now. Above 25, I think we're talking game on to 28, 29 from a technical perspective. Obviously, Mr. Powell might have a say in that. And the market might have a say, but Coinbase looks decent. The problem is it's up a lot now. It's, at some point you get up into the 60s, 70s, 80s, it's up a lot. Could it keep going? Yeah, it totally could, but it is up a lot, off of those lows, really just in January alone. It hit a new low, literally, think about this. It hit a new low on January 6th, hit an all-time low, 31 bucks, and then it ripped up to 60. It's up 100% this month alone. That's impressive stuff. Very important number for going long any company is free cash flow. Yeah, I think that's, if you're going to go long a lot of these names, you got to be paying attention to earnings right now, especially because we don't know what's going to happen next year or two, maybe 3. Or you try to avoid the individual stock exposure. So you can go long individual stocks, great, but you're going to have that, obviously either the long-term approach, long, or if you're trying to play swing stuff, even just shares, you still got to kind of have a good feel for these earnings and know what you're looking at to some degree. And then for me, it's I'm just going to buy ETFs or buy a collection of these things instead of having a one individual exposure. Just get a basket of them instead of having that stuff. It eliminates the need for me to have to worry about it, which to me, I'd much rather focus my attention elsewhere. But to each your own, everyone has their own, it doesn't mean that it's wrong. Doesn't mean that it's right. That's just kind of my take on it. FOMC SOEP 10% rate has not changed from 5.1. I guess it does not matter if we get a 25 or 50 basis point hike this Wednesday. Go to the moon because market already know. I don't know about that, but who knows? Or April's the last hike. Let's see. Go back to this chart. We got the meetings from the Fed are February 1st, March 22nd, and then May 3rd. So there's no April meeting. The meetings go February 1st, March 22nd, May 3rd, then June 14th. It's not every month. So what the market's pricing in is essentially 2 25 basis point hikes, the next 2 meetings, and then it's going to pull back, or then we're going to kind of pause. I think the termination rate stays at 5.1. that's going to be interesting to see where that plays out by the end of this week after this meeting and what the Fed says. Let's check on the 10-year. The 10-year is chilling at 3.5. 3.5, man, on the 10-year. What if this is all just a January effect? It may very well be. It may be. Transfer money to the IRA and say hello taxes. The thing with the IRA, it's crazy to me, is like if you had a strategy in the, let's say you had a day trading strategy or something like that, right? And you were ripping that in the IRA, that is insane. Like you get to that point where like, money doesn't matter right now. You got enough for in the meantime, you get a job or whatever. And you're like, all right, I'll trade my IRA. And you were solid and you're consistent in it. That's like that would be the sickest thing to be able to do. Just be consistent in growing a massive IRA, just huge. And you got no taxes to worry about in there. That's sick. That is the goal. That's goals. When you have a freaking fat IRA that is already looking solid, and then you can trade around it as well and just keep compounding it. Good night, gents. I'm getting tired, but I am getting tired as well. I'm probably gonna wrap things up here. It's 10:30 my time. I went to bed at like 3 o'clock yesterday, 4 o'clock. I got no sleep this weekend. I feel like I've been off. So back on the routine. Been trying to testing out a couple days a week. I don't lift every day, but I used to, just not really great on the body, at least from my perspective. I have a much better routine now when it comes to the gym with like, I kind of I do like a push pull. Like on push days, I'll do like legs. I'll do like leg press. I'll do like squats or whatever. Hack squats. Like I'll do leg and calves. And then on my pull days, I'll do extensions and hamstring curls stuff. So like I just essentially cut it down to, instead of legs push pull, I go push pull. But on my push pull days, I incorporate legs in there. So it's like 6 to 7 exercises on each day. One's a heavy day. One's a lighter day. So 4 lifting days a week. I go like 3. 4 lifting days a week. So been much better. And then the other days I try to mix in maybe like one day is a full rest. Depends on how I feel. Or, some cardio. And the other days I try to mix in cardio, stretching 3 to 4 days a week as well, which my flexibility has been horse shit. I've gotten so much better. I just feel better by doing that. And then, adding in like abs, cardio work and stuff like that on other days. I want to get to a point, my cardio is super bad. I want to get to a point where I can like confidently be able to run a marathon and be like, yeah, I can totally do that. And, I don't know what the number, what's a good time, but like be able to do that in like a decent time. Maybe like a sub 10-minute mile average for like a marathon perspective. Cause I've never really been able to run that far. Just been someone who like just lifts weights casually kind of. And not casually, I've done it for a long time, but I'm getting to this like morning where like I get up, go to the gym at like 6. So it's done, knock it out before the sun comes up. I love that. I did it on Friday to test it out. I loved it. So maybe that's what we're running with. But I got to be going to bed earlier if I'm going to do that, because sleep is what it's all about. What actually caused GB to decline over 6 months? Inflation go up or down? This is going to be interesting, because I had that same kind of question. Is because GDP came in nice, quarter 4, and we're expected to kind of see that decline substantially. I don't really have an answer. I don't know. That's something I'm going to be looking deeper into and kind of trying to get a feel for that. But that GDP that everyone's expecting to start coming in and getting us into that technical recession, maybe not quarter 1, but like at least quarter 2 of this year, I'm curious where that's coming from, and how bad that's going to be. What industry is most profitable right now? I mean, right now you're seeing the Dow, you're seeing the industrial stocks, you're seeing a lot of those stocks are doing a lot better than the tech. Although, however, right now, if we keep rallying, there is, I think, a lot of a bounce back trade in the growth to tech space. Is that going to sustain? I don't know, but that growth to tech space has already bounced back substantially, but still could go more if we go up. Obviously, if we go down, good chance everything kind of takes a hit. The Dow probably holds up better. Probably, again, that could change, right? We've seen those correlations and those, that stuff kind of bouncing around. But it's kind of an interesting spot. If we keep rallying, I think that my focus will be on those growth to tech names for like short-term day trade type of stuff, because they've got more upside. And then, if we're going down, we'll see where the relative strength versus weakness is over the coming days and weeks. But we'll see. Leg day is my favorite. I don't have much muscle outside. I used to be, just run track in, I played lacrosse and I ran track in the winter Indoor track, that sucked, dude. Indoor tracks suck. And being in Connecticut, we would practice outside in the freaking January. Like, that was horrible. But I used to be much more of a speed-based runner, but not really, like, I wasn't really like insanely fast or anything like that. I feel like I hate leg days, but I get them done. Football game today, Kansas is. I'm a big Eagle. Where is it? I've been a big Eagles fan my entire life. We're gonna see. Eagles haven't really had to be tested the past 2 weeks, so Kansas City's a big time test. I don't think Kansas City's defense is the same type of defense as 49ers had. 49ers defense, well, maybe it didn't look like they were that good. They're solid. The problem is that their offense didn't help them at all today. And they don't have a quarterback. It's a whole mess there. I feel bad for them. They didn't really have a shot anyway once their QB goes down and stuff. But it is what it is. It's football. It's how things go. Anyone can get hurt anytime. But it should be a good game. I'm hoping for a good explosive type of offensive game. I think the Eagles defense is solid, but they've got their flaws. Eagles offense, I think they can do it all. They can do a lot. They obviously can be stalled out and they can have a tough time. But I don't think I'm super worried about the Kansas City defense. I'm much more worried about the Kansas City offense on the Eagles defense. So, maybe we get a beautiful blowout type of, not blowout, but like big time back and forth, high scoring game where it's just like both teams cracking back and forth. I hope, but we'll see. And I'm definitely excited for it. But fly Eagles fly, baby. We'll see. I went to one of the games this year in Philly. And of course, it was the game that they lost. But Monday night game back in October, played Washington. That was the game they lost. Terrible game. It was like one of the worst, just most boring games that I've freaking seen. But that's the deal. Happy either way who wins. I was kind of thinking that maybe see Kansas City. Cincinnati pull it off. But yeah, it was a good game either way. It was a good game either way this afternoon. Here in Lotto, we're going to go into a double dipper session. But I guess the thought is like technically we had one already like last year, and this will be like the second one, I guess, or whatever. The other aspect of it is that we see throughout history these CPIs, inflation cycles. You get a wave, comes back, it doesn't get back down. If you can't get it back down to sub 2%, you get a second wave. That's, I think, where a lot of people are thinking now, because if you have a scenario like that, with how much debt we got, all this stuff, we can't keep rates this high for that long. So the reality is it's inevitable they're going to cut rates at some point. And if they do that and stimulate again, what does that mean? Maybe that means inflation spikes back up. So we're kind of in this like weird spot of like, if they do that and then rip inflation back up, it's to what degree? It's if the Fed, if we can kind of stay afloat and chill for now and like survive and be fine and softish landing type of stuff, whatever. But then we kind of have to start raising rates again, and we kind of get inflation kind of inching back up. That's a problem. Or did the Fed do too much already? Are we going to be down into a bad recession? Are they going to have to go like hardcore stimulate at some point in like a year or so? I don't know. Which will then ultimately cause higher inflation down the road years later. What scenario? That's kind of like the thought process I think people are kind of going after right now. So we shall see. With that said, I'm going to wrap things up. We'll go live tomorrow. We'll do Wednesday for Powell, all that. And then we'll do a Friday like usual for Power Hour. So Monday, Wednesday, Friday. Maybe if stuff's going crazy on Thursday, we'll maybe do something on Thursday night if I have a chance to get around to it. But we shall see. Thanks so much. I'll see you guys tomorrow. If you want to hang out in the live stream, if you can make it, I appreciate you. Thumbs up button. And I will see you guys later. Have a great Sunday night. Rest of your Sunday night. Not much left. And hopefully everyone has a